Hi everyone. Today we're going to be talking about Thailand. Thailand is one of the world's top destinations for tourism, and every year millions of people come for the beaches, food, and culture. It's also a major hub for medical tourism and one of the most popular homes for expats, retirees, and digital nomads. However, there's somewhat of a paradox in Thailand. While Thailand is easy to live in, it's not always easy to profit from. So in this video, we'll explore why Thailand is beloved as a lifestyle destination, but remains challenging for investors who want to profit from it. We'll also talk about what options are available if you're interested in putting your money to work in the country, and we'll look at some of the major visa categories in Thailand for people who want to stay in the country long term. This information is accurate as of September 2025, and before we get started, this presentation is for informational purposes only, and this is not investment advice. Let's begin with the big picture. Thailand has a population of about 70 million people, but it faces unique demographic challenges. The country has become an aging society without first achieving high income status. Compare the situation to Japan. When Japan began aging, it was already one of the richest countries in the world after decades of rapid growth. However, Thailand is still aging, while far from being a truly middle-class society. There remains deep income inequality, and stark rural-urban divides means that large portions of the population remain economically insecure. This creates challenges for Thailand in terms of a smaller workforce that must sustain an older population, lower productivity risks due to this aging population, and increased healthcare costs for the elderly. Economically, Thailand has averaged 3% growth over the past several decades, which sounds fine on paper, but it's trailing behind regional peers like Vietnam and Indonesia. Much of their growth has been fueled by rapid modernization and increasing liberalized economic policies. Geographically, development has been unbalanced. Bangkok dominates the country's economy, while many other cities and regions are struggling to keep up. This concentration limits broader growth and creates uneven opportunities within the country itself. All of this adds up to a tough environment for investors. The barriers are both legal and economic. Foreigners can't open brokerage accounts as easily as in other countries, and economic growth has been below average compared to its neighbors. It doesn't mean it's impossible to profit from Thailand, but it helps explain why markets have lagged behind the hype that often surrounds Thailand. As we covered in our previous video on Thailand, foreign investors are limited in the ways that they could directly invest in Thai equities. Most retail investors are limited to Thailand-focused ETFs with Thailand exposure, or equities that trade OTC. Certain foreign residents, usually ones that have long-term residency visas, can access the Thai stock market directly, but opening a brokerage account as a foreigner isn't as easy as it is in other countries in the region. Check out our previous video on how investors could access Thai stocks. When it comes to real estate, foreigners are allowed to own condominiums, but with an important restriction. In any given building, foreigners can hold no more than 49% of the total units in that building. This makes condos a viable option, especially if you're serious about living in the country long term. Bangkok continues to grow, and condominium complexes continue to pop up further and further outside of central Bangkok. If you look out your window from a Bangkok high-rise, you'll probably see construction on new high-rises happening in several places. So if you're bullish on Thailand's growth and you're interested in staying in the country for a while, this can definitely be attractive. However, when it comes to owning land, the rules are much stricter. In general, foreigners cannot own land directly. The common workaround was for a long time long-term leases, usually for 30 years. However, a March 2025 ruling made long-term leases less secure. Specifically, the Supreme Court ended the so-called 30 plus 30 plus 30 structure, which many people relied on to extend a lease up to 90 years. Now, extensions on land leases are not guaranteed, and they must be renegotiated after they expire. Thus, if you're fixed on owning land, it's important that you have a strong property lawyer to help you with this process. The bottom line is that real estate in Thailand may make sense if you're committed to the country long term and you're somewhat bullish on its growth perspectives. But it's not a market for quick flops or easy profits the way you might see in other countries. Beyond traditional assets, some foreigners look at Thailand's startup scene or even founding their own companies in the country. Bangkok has a lively ecosystem in areas like fintech, health tech, tourism tech, where the country's strengths in finance, healthcare, and travel create natural opportunities. For angel investors, this can be exciting, but it's important to understand the challenges. There's no shortage of opportunities, but they come with their own risk. The market is still developing in some ways, capital can be harder to access, and the exits are less predictable than more established startup hubs. Good opportunities often rely on local networks, which can be difficult to develop if you're just coming in. For those interested in opening a business themselves, Thailand has several important barriers to consider. Bureaucracy and licensing requirements can be heavy, and there are some foreign ownership restrictions. For example, in many sectors, foreigners can only own up to 49% of a company unless special approval is granted. And running a simple LLC or small company as a foreigner usually isn't as easy as it would be in Europe or the United States. So the message here is that opportunities exist in Thailand's startup and business space, especially in Bangkok, but they come with a lot of caveats. Angel investing is high risk and starting your own company is possible, but not simple. It often requires local partners, careful structure, and a good lawyer to help you deal with the bureaucratic processes that are involved. When it comes to living in Thailand, the visa landscape is paradoxically much friendlier than the investment landscape. Thailand offers a wide range of visas for people who meet certain qualifications, and these include remote workers, retirees, and high-wealth individuals. Most recently, Thailand has introduced the Destination Thailand visa. This functions like a digital nomad or workation visa designed for young professionals who want to base themselves in Thailand while working virtually. It's designed for a wide range of people, including remote workers, freelancers, and others who want to live and work remotely in Thailand. It's a key part of Thailand's strategy to attract new types of tourists and long-term residents. The visa is also open to people such as those who want to take Muay Thai or Thai cooking classes, or those who want to seek medical treatment. And to acquire this visa, you generally need to show proof of a bank account of around 500,000 baht, which is about 16,000 US, a little bit less than 16,000 US, and that will allow you to stay up to 180 days in Thailand. The visa is renewable. For retirees, there are long-standing options like the non-immigrant O, OA, and OX visas, which require proof of income or savings and, in some cases, health insurance. These are specifically designed for people over 50 who want to settle in Thailand long term. The visas do not allow employment, but they provide a clear path for retirees who want to make Thailand their long-term home. For those with wealth or specialized skills, Thailand's long-term resident visa is a solid option. This visa, which offers a 10-year term and a digital work permit, has been updated to attract more talent. For wealthy investors, the old income requirements have been removed, but the focus now is squarely on a $1 million US asset base and a $500,000 investment in Thailand. Meanwhile, for skilled professionals, while the 80,000 US income requirement generally remains, the rules around employment have become more flexible. This visa is certainly not for everyone, but it does provide a clear and attractive pathway for those who meet the criteria. So while investing directly in Thailand can be complicated, living in the country is much more accessible. From retirees to professionals to digital nomads, there are multiple visa categories that make it relatively straightforward to stay long-term if you want to. So in conclusion, Thailand remains a popular destination for expats of all backgrounds and lifestyles. The country is actively opening up with new visa pathways and policies designed to attract foreigners from a wider range of professions and circumstances. However, actually profiting in and from Thailand can be more challenging than in some neighboring countries. Thailand is a more advanced market and is tightly regulated, making it harder for foreigners to open accounts and get set up than in other places in the region. Thai companies are at many different stages of development, and growth expectations differ from more faster expanding frontier markets. Real estate and startups are also possible, but both come with significant legal and regulatory considerations that investors should carefully consider. Foreigners interested in investing and living in Thailand should consider their own lifestyle goals and investment objectives, as well as what Thailand offers relative to these goals and objectives. If you found this video informative, please check out Vina Edge for more content on emerging market investing and living. And once again, this presentation is for informational purposes only, and it is definitely not investment advice.